The next step I need to do is, so that's A, prepare a cash budget for July and August. Okay, so my cash budget is my cash inflows and my cash outflows, or expected cash inflows and expected cash outflows. Okay, so my expected cash inflows. So now I need a title, as I always need, cash budget for Easy Slim. Easy Slim for 2 months. Ending August. And the first thing I'll need to do is my collections from customers. And I'll have a month of July and a month of August. So my collections, I just now transfer this information down to here. So I've got 97,000 and 114,000. Now I have to go back and I have to look at a few things. It says my suppliers provide goods on credit and are paid in the month following. So my suppliers, now my suppliers relates to my cost of goods sold. So I know that if I'm buying them in July, I'm paying for them in August. If I'm buying them in August, I'm paying for them in September. And it tells me, there's one more piece of information, that my accounts payable is 40,000 in June. So this June would be paid in July. So let's have a look at our payments now. Whoops, and we'll get that back on screen. So payments, and I would purchases. Now my purchases would be, my accounts payable was 40,000 in June, I pay for it in July, so I need to put in my 40,000 there. And then from my cost of sales, I know my 48,000 in July is paid the next month in August, so I need to put in my 48,000. Now let's have a look at what else we got there. Now it tells me that my other expenses are paid in the month that they are incurred. So these expenses here, administration, selling, is depreciation a cash expense or no? So it's a non-cash, so I don't include that. So I'll include these two amounts here, selling, administration and selling expenses. So let's put those in. Administration. How much is my expense? 10,000. It's 10,000 every month, so that makes that easy. And we're putting in selling expenses, and my selling is 15 and then 20. So 15,000 and then 20,000. Do we have any other expenses? It tells me my dividends of 25,000 will be paid in August, and a loan repayment of 20,000 per month will begin in July. So I've got two things there. So let's put in my dividend payment first. That was, well, how much was it? 25,000. And that was in August. And then it said loan repayments will be 20,000 a month, starting in July. So we get to that. Is there any other items we need? I've ticked off this one, I've ticked off that one, I've ticked off that one. My accounts payable I've ticked off. My inventory, it doesn't tell me anything. Goods are supplied on credit, I've ticked off that one. And my sales in June were 90,000, I've ticked off that one. So, alright, now the only things I need to include are finish off my cash budget. I've got cash opening balance is 4,000. I've got to remember this one because that becomes important. So, payments. Who's fast on the calculator? Can you work this one out for me? 40, 50, 65, 85,000. Agree? Yeah, okay. And what have we got? 58, 78, 98, 118, 123. Alright, so now what I'm looking for is what's called my net cash flow, which is my cash inflow minus my cash outflow. So it's my cash inflows minus my cash outflows. So in month July, I've got 97 minus 85, gives me 12,000. And in August, I've got a negative 114 minus 123 will give me a cash outflow of 9,000. Now I bracket it to indicate outflow. That reminds me when I'm doing my totals. And then we look at opening cash balance. And what was my opening cash balance? It was $4,000. So now I can tick off that one. I've completed all that. Opening cash balance was 4,000. And then we're looking at closing cash balance. So my closing cash balance will be my net cash flow plus my opening cash balance. That'll give me 16,000. Now my closing cash balance becomes my opening cash balance the next month. 16,000 plus my negative 9,000 will give me $7,000. And that's my cash flow for the period. Alright, so that's that. Let's have a look what next question is. Okay, so I've ticked off B. Now it says explain the difference between a cash budget and a cash flow statement. Cash budget looks at, future cash flow. Cash flow statement at past transactions. And that's one mark and that's the other mark. Oops. You can't read that, there it is. So yeah, cash budget looks at future cash flows, which is what we've done here. And my cash flow statement looks at past cash transactions. So what happened over the year or over the period is in there. Now the last question, D, it says explain the difference between a top-down and a bottom-up approaches to budgeting, particularly with respect for behavioural budgeting control. Okay, top-down, management set budget targets. Bottom up, lower levels of employees get involved in budget input. And there's another 2 marks.